Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 30th of November, 2020 at 6:30 p.m. Central Time. You know, having owned a stock firm, and I still own my own commodity firm and the like, I learned a bit about money management. And when you get a monster month like you had in the stocks, in the indices especially this month, what money managers, especially at the end of the year, tend to do is cash in. Now you're going to say why. It depends how their management contract with you or the fund they're managing works. Is it a high point for the year? Is it a high point for a quarter? Is it a high point for a month? But when you're making 12% in a month, the way that some of these indices have done, what is wrong with calling it a day and for the year? Closing shop and do your window dressing at the latter part of December. Let's assume you made 12% this month and maybe you made another 10, 15, 20%, who knows? Maybe you didn't make any money. Maybe this was the only month you had. Maybe it got you out of being a loser for the year. If you caught the trade, a lot of traders come out. And that's why you get to these points, experience matters. So I think today's break in many of them was no more than that wave of money doing what I'm saying. It's over. So now we get back on the charts for what's normal. But I think a certain amount of the money that's there may not do anything until we get to the latter part of the month when I told you I'm expecting that Santa Claus rally. Doesn't mean I'll be right because I'm expecting it. But I am expecting it, and I think some funds will want to own, be it the ETFs, be it the futures. They're going to want to show on their thing what they own at the end of the month, and that's called the window dressing. As for the metals, I think you're finding an attempt in silver to find a value. Gold still has a ways to go to do that. Platinum market, to me, I still like that market, and I'm still bearish on the dollar index, but I understand. Today you got to the lower Bollinger Band. I saw the covering there, and you had reasons to take off some of the other currencies today. As for the energies, when we get there, we'll talk about them. In the S&P, if we look at a weekly area chart of closes, okay, we're going to start off now at the new week, looking to see how this does. It's up about 0.8%, as you can see. Remember, we're end of a month also, so traders will look at the gains that these markets made. When we take a look at a bar chart, you can see the sideways action the market has got right here. It's very impressive. You know, back at this point, I was saying we had an inverted head and shoulder formation. This would have been so classic had you not taken out these points going up for that new high. I still look at it in amazement as to what it did. And the market is now, if you will, distributing money right here at this 3640 level roughly. When we take a look at what the swing lines are doing, with today's action, the market turned bearish. Why? You now have lower highs, and today's low was under this low. What negates this? Taking out 3652, the high of Monday, negates that. If you take out the high of an outside day down, I call that a bear trap. Bearish because the market made the higher high, lower low, closed lower on the day. If that occurs, I look to see a couple of numbers. Let's put some averages on the market. The market has stayed during this whole time above the 18-day average of closes since literally the beginning of November. So the bias has stayed all the way up at this point. Where's the resistance? The resistance is the upper Bollinger Band, which you didn't hit except at the beginning of the month. So if you took out that 3652, I for one would not be surprised to make a run at that number and have resistance show up there. Let's assume the market doesn't hit that number, doesn't even go up through 3652. Well, you're still overbought. So you have an overbought market that has to do one of two things. It either embeds where both numbers that make it up go over 80 for several days in a row. Now, if we come back on the chart, you weren't that way today, you weren't that way the day before, so you don't have several. You're just overbought in an area where even if you hit that upper Bollinger Band, I'd be looking for some resistance. I don't see anything on the chart that is bearish. Maybe that's the right way to sum this up. In the Nasdaq, at the upper Bollinger Band, in an overbought market, I don't care if it goes higher or not. That's the high percentage traders are taking money off the table against that. They did so there. They'll do so in areas like that. They'll do it on declines in the market. That is the high percentage move. That doesn't mean the market can't run on it. But if you play for those moves, what you're really saying is, gee, I don't want to be with what happens 95% of the time. I'm going to bet on that 5% difference. Okay, that's your bet. Most of us want to be on the other side of the bet. That doesn't mean the trend isn't up. It is. In fact, I want to show you something. If we take a look at just today's action, and this is through today, the market made a lower low. Then Friday's high in this market was 12,307.50. You took that out, you closed higher, right into that Bollinger Band. You have an outside day up. Unless you take out 12,086, this market can go into that band and try to ride it and push the slow stochastic on it. Take out today's low, Monday's low, then I get concerned that the market wants to go back just to the 18-day average and regroup. Am I bullish? I'm in that camp. When we step over to the Dow, in the Dow, you lost the embedded reading. When you lose an embedded reading in unison, what do I tell traders to do? You got to be out, in my opinion, of longs. Does this mean you're short? Nope. Losing a long, an embedded reading, which, let me just show it to you. You lost it today, Monday. You have not gained it back in early trade. So when you don't gain it back right away, the odds favor that the pros are going to take money off the table now. That's all that I'm saying. I'll take a fresh look at the market when this gets resolved, either re-embed or work it out more to the downside where I feel better about the market not being overbought. That's how I'd be approaching the market and how I will approach it for my paid subscribers. In the Russell, if you lose the embedded reading, I'd scoot, but you haven't lost it. You have an outside day down. I can understand that. What if you took out 1859, be it today, Tuesday night, and Tuesday daytime, or Wednesday? Then I think you're going to 1893.50. So I think the bulls might be taking money off the table right here, a little bit, but I'll bet, in fact, that's what betting is in futures, right? But I'd bet that if you take that out, the market will make an attempt. Doesn't mean I'm right on this at all for that upper Bollinger Band. I'd be dead wrong if you took out 1859 and then fell back through 1829.30. But that, hey, that's a 30-point move. That's rather large in these markets. Why I'm still bullish on most of the stock indices is you haven't lost the bearish embedded reading in the VIX. Even with all of today's action, that's staying there. I think the pros added to shorts today in the VIX, and I think they're still looking for that lower Bollinger Band. In the T-bond market, I see overbought. When I see overbought, it tells me, why do I want to play that? You have the trend of higher lows, higher highs still at work. The trend is up, but it's overbought. I'm not certain that there'll be too much coming out of that. Now, tomorrow at 9 in the morning, we get in front of a Senate committee about the CARES Act. This is the COVID Act, in essence. Fed Chair Powell and Secretary of the Treasury, Mnuchin, speaking. Now, you know Mr. Mnuchin pulled the plug on Mr. Powell by taking the remaining money that was available for this and calling it back to the Treasury at the end of the month. I'm sure he's going to say that Congress can do with it what they want, but he felt it was the obligation of the Treasury to take the money back since it wasn't being used. Let's see how that plays and how Mr. Powell talks about that tomorrow. It will impact, I think, the financial markets. All eyes will probably be on that in a large way. You're still in an uptrend in the notes, but again, in an overbought condition. You're in the dollar index hitting for the first time the lower Bollinger Band. And you have an embedded reading. So I think the traders took some money off the table, but I think they're more than willing to be short sellers on rallies in the dollar index again until that reading is lost. In the eurocurrency, what did you do on the first challenge? Let me just bring you up here. This was Friday. 1966.5 was the high. The Bollinger top was 1962.50. So I think the pros came out there. And this is what the market did today. Again, the market down a fraction from that, and it's still lower a bit tonight. Will it embed? That is what's going to be fascinating. I got to get through tomorrow to know if that happens. Could be the third day in a row. In the end, I don't see anything. I see a market that's got all kinds of battles. Lower highs, lower lows, and it stays over the 18-day average. I don't know what to do with a position like that. Bitcoin. So you take Bitcoin down this day, and it makes all the news, down $2,260. And then today, the market goes up $2,815. I don't know why, but I have an idea. I think the early money got out here. Just what I'm saying. End of a big run in the market. Money manager money at work. Would not surprise me at all. And now the market doesn't have the selling pressure, and it just went to where it had to go. What number did the market stop at? Remember what I call the red line? The line in the sand? That's the 18-day average of closes. I believe in that, and that's what it's doing. Where's the rally ending? Right here. Keeps getting contained by the upper Bollinger Band. Interesting. Then the difference between February Brent and WTI. So the market is making an early statement that maybe 270, 275 is too high. Here's what's going on in the oil. I did a piece today for Bloomberg early this morning, about 11 o'clock for their TikTok program. And in it, I was late by design because I was waiting on my sources that I use and read about what were they saying was going on in the meeting. And how OPEC works is you think you're getting a formal announcement. Nah. It's all the ministers come out and talk to press on their own. They leak like, I don't even know what to call it. They've got drooling mouths. They just talk and talk and talk. So what it's boiling down to is the meeting started this week and it was supposed to end today. No later than tomorrow. But today was when we were supposed to hear everything. By 11 in the morning, I had heard that it's going to be postponed, the meeting, for another day, Tuesday. And I found out the reasons had to do with Russia and another OPEC plus country not wanting to make further cuts in production or to keep the cuts as they are. Well, later in the day, more news came out. And now the meeting's going to go to Thursday. And what it's come down to is now the Saudis are telling Russia, Nigeria, and Iraq that, hey guys, you've been overproducing via your commitment this whole time. You've got to get back in line. And you're the ones that have to cut the production. We'll stay where we're at, but you've got to cut. Well, these countries don't want to. And now what does that do? The last battle we saw didn't end very pretty in these markets. Remember, you went negative in crude? Could happen again. I'm not saying it will, but that's where you're at. So this is still very much up in the air. And when you look at the markets, you're backing off a little bit. You still have the bullish embedded reading. We'll see how this all plays out. Support's all the way back, though, at 44.82. That's $3 lower. I'm not that keen on that. You're still embedded here in the Jan. Until the embedded reading's gone, you don't have to get to these numbers. You find support on the breaks is the theory, but you can see the battleground. Heating oil, same thing, embedded reading. I'm still bullish all these markets because of that, but I realize what's going on, and I have a theory. My theory is, why would you stand on a railroad track and try to dodge that speeding bullet train coming down it? Do you have any idea what OPEC's going to do? Do you know this deal won't fall apart? I'm sure you think you do. Your problem is this market will move like a lightning bolt one way or the other, especially down, if it gets back to a price war that the Saudis can beat everybody at. That is the simple fact. They showed that already. Will they have to use that muscle? I don't know, but I don't want to guess on it. We're getting our first real winter storms in parts of the East Coast and going through the Ohio Valley and the like, so keep your eye on it. Natural gas getting a bid off that. We'll see if the market is in fact made a trade low. I want to remind you that one of the indicators that I like to look at to see is the market paying attention to trends. Is it getting muscle going with what it's got? It's called the Arun indicator. And what the Arun indicator does is it's going to look at time and price together. And via that, I show you the formula that it uses and how it graphs that, because you're looking for an edge. Like I use slow stochastics as one of the edges in the market. Well, this is another one that some people like to use. And they look to see in this, is the market defining the trend, or is it starting to lose that trend? It often shows up in these momentum tools before it's seen in price. It's free. I created a couple of part video series for you, how it works, how you apply it on your chart, and yes, most chart services worth their salt will have this in it. How do you get it? Go to our website, free offers, take a look, the Rune Indicator videos, and away you go. I'm Ira. Have a great day.